Well, let's take a look at Tesla. The company reported quarterly results after the close of trading yesterday. Those results were considered weak and missed expectations. But one thing that has given investors some encouragement, and you can see the 9% rally in the stock currently, are the future plans of Elon Musk. He has said that he will spend less time at the White House and more time at Tesla. Let's put some questions to Stephanie Brinley. She's Associate Director at AutoIntelligence, Director in AutoIntelligence at S&P Global Mobility. She joins us from Southfield, Michigan. Stephanie, thanks a lot for joining us. How important is this declaration by Elon Musk that he'll chill out a little bit on his White House activities and spend a bit more time on Tesla?
Well, it seems to have been well received so far, for sure. We'll see how it all evolves. I think when we look at Tesla's sales for the first part of this year, and even looking into the rest of the year, some of the issue too has to do with aging product and some other things that aren't necessarily related to Mr. Musk's government activities. And we also have an expectation that 2025 and 2026 are going to be much lower than we initially expected as a result of the tariff situation. So Tesla's going to have still a tough year to turn sales around, whether Mr. Musk is at the factory in Austin or if he's in DC.
And what about those results? There has been a sense of trepidation among investors as to how bad the numbers would be because the sales numbers tend to come out before the financial results do. The results were soft, were they not?
They were soft. I mean, when you sell fewer vehicles and you have higher costs, then your margins are affected and impacted, and that's exactly what happened. So it was a pretty big drop in terms of operating margin and adjusted EBITDA. But the company did still come out with a profit, so it didn't quite get as far as a loss, and was able to increase a little bit of its cash on hand. So it does seem to have enough money to go forward, and it was not an ideal result, but it didn't necessarily shake it to its foundations. It is still a stable and robust company, even though sales were down from what they were before. They're still pretty strong, and Tesla's still very strong in the electric vehicle market.
What is your call on the Tesla brand and whether or not it has been hurt by Musk's very prominent role at the White House?
Oh, that we wait and see on. We kind of watch what consumers do and say, and don't necessarily research that as in depth. Consumers tend to get excited about things. It's interesting to see whether or not how many of the sort of the protests and things were people who are really considering buying or people who are just into the moment. It was interesting that during the call, Mr. Musk did try to just say that the protests were all arranged by people who didn't like what he was doing. And we'll see kind of how that shakes out. I think over time, though, I mean, consumers don't buy from the CEO, and any company, any automotive company needs to get beyond their CEO. I mean, if you think about General Motors, Ford, Volkswagen, on and on and on, I mean, these companies have been around for decades, and some of them more than 100 years. They have to be bigger than any given CEO.
How much emphasis do you put on the self-driving initiative at Tesla, which gets a lot of attention, and the Optimus humanoid robot project, which gets a little bit less attention, but is still there, as well as ambitions of Musk? How important are they to investors?
They're certainly important in the fact that that's where Musk expects Tesla to get most of its income from, and it's certainly positioning itself to be out there. But it still has regulatory hurdles to get over in terms of deploying and some of the self-driving technologies. And there's still a little bit of trepidation in how fast consumers are really going to take that on. And how much they're going to want to spend on that. Certainly, Musk is optimistic on it, but there's a little bit of wait and see. I think there's still some consumer concern about how well it works in the wild, and that's going to take maybe a little bit more time to get over than he thinks.
in the shorter term, the Model Y is coming in, I believe, in 2025. That is a much more affordable Tesla in a sport utility vehicle form. What are your thoughts on the Model Y and what it could do to sales?
Well, the Model Y was just refreshed earlier this quarter. What they've said is that they're expecting to have a more affordable vehicle, by middle of this year, but we haven't really seen a lot about it. A more affordable version certainly it opens up the door for more accessibility and more consumers being able to afford it. But it's also coming at a time where the market is getting not necessarily crowded, but there's a lot of competition at a lot of different price points. So I think that it can do well, but I don't think that simply having a cheaper one is going to turn everything around for them. There's still a lot of other macroeconomics things happening as well. And again, there's so much more competition for Tesla than there used to be.
Stephanie, thank you so much for joining us today. That's Stephanie Brinley, Associate Director of AutoIntelligence at S&P Global Mobility.